Billionaire fortunes have surged by more than 70% since 2020, and the hidden catalyst behind this explosion is something most people overlook. Stay with me until the final reveal, because number one will shock you. Surprise came when the global pandemic forced investors to rewrite the rulebook, channeling capital into sectors that could thrive remotely. As lockdowns emptied city streets, tech companies delivering cloud services, video conferencing, and e-commerce platforms saw revenues explode, pulling market indices upward. Traditional brick-and-mortar businesses faltered, prompting a massive reallocation of wealth toward digital leaders. This shift laid the groundwork for the next wave of billionaire creation, as founders and early shareholders of these resilient firms saw their net worth skyrocket almost overnight. The dramatic swing also encouraged venture capital to flood into emerging tech, setting the stage for the unicorn boom that followed.
Accelerating the trend, a flood of venture capital poured into startups that promised to solve pandemic-era problems, birthing a record number of unicorns. Companies in fintech, health tech, and remote work solutions reached valuations over $1 billion at breakneck speed, turning founders into instant billionaires. The rapid scaling was fueled by low-cost capital, a hungry consumer base, and the urgency to digitize every facet of life. As these unicorns went public or attracted mega rounds, their shareholders amassed fortunes that dwarfed traditional industry magnates. This wave not only added new names to the billionaire list but also reshaped investor expectations, making aggressive growth strategies the new norm. The momentum from these tech giants would later intersect with macroeconomic forces, amplifying wealth creation even further.
Behind the scenes, central banks worldwide kept interest rates at historic lows, effectively cheapening money for both corporations and individuals. This environment encouraged leveraged buyouts, stock buybacks, and aggressive expansion, allowing companies to boost earnings without the drag of high borrowing costs. For billionaire owners, lower financing rates meant higher valuations as future cash flows were discounted at reduced rates, inflating the present value of their holdings. Moreover, investors seeking yield migrated to equities and alternative assets, driving up share prices and further enriching equity-heavy portfolios. The low-rate backdrop also spurred the rise of private equity funds that acquired and consolidated businesses, creating additional pathways for wealth accumulation. As the world began to emerge from the pandemic, the lingering low-rate policy continued to feed the upward trajectory of billionaire fortunes.
Unexpected disruptions in global supply chains forced companies to rethink sourcing, production, and distribution. The scramble to secure critical components led to massive investments in automation, nearshoring, and logistics technology. Entrepreneurs who owned firms capable of providing resilient supply chain solutions, whether through advanced robotics, AI-driven demand forecasting, or strategic warehousing, found themselves in a lucrative niche. Their businesses attracted premium valuations as corporations paid top dollar for stability. Simultaneously, the scarcity of certain goods drove price spikes, boosting profit margins for owners of commodity-linked enterprises. These dynamics translated directly into higher net worth for the leaders of supply chain innovators, adding another layer to the billionaire growth story that followed the initial tech surge.
Digital assets burst onto the scene, turning speculative tokens into multi-billion-dollar market caps almost overnight. Early adopters and founders of major cryptocurrency platforms amassed fortunes as prices surged, especially during the 2021 rally that saw Bitcoin breach $60,000 and Ethereum cross $4,000. The broader acceptance of blockchain technology spurred venture funding into decentralized finance, NFTs, and Web3 projects, creating new billionaire creators beyond traditional sectors. Even established investors entered the space, diversifying portfolios with crypto holdings that amplified overall wealth. While volatility remains, the initial wave of digital asset wealth contributed a significant chunk to the post-2020 billionaire boom, highlighting how emerging financial technologies can rewrite wealth distribution in a matter of months.
Global markets opened their doors wider as trade barriers fell and cross-border investment rules eased. Emerging economies attracted foreign capital, allowing multinational conglomerates to expand into new consumer bases at unprecedented speed. This liberalization gave rise to mega companies that leveraged scale across continents, boosting revenues and, consequently, the net worth of their founders and major shareholders. Additionally, the rise of multinational exchange platforms made it easier for high-net-worth individuals to diversify holdings globally, smoothing out regional risks and amplifying growth opportunities. The combined effect of easier market entry and broader investor access added a powerful catalyst to the billionaire wealth engine, reinforcing the gains already sparked by technology and finance.
Policy changes in several major economies introduced lower capital gains rates and new wealth tax exemptions, effectively reducing the tax burden on high-income earners. Some jurisdictions created favorable regimes for investment income, prompting billionaires to relocate assets or establish holding companies abroad. These tax-friendly environments allowed wealth to compound faster, as less of it was siphoned off each year. Moreover, governments offered incentives for research and development, renewable energy, and tech innovation, directly benefiting the industries that were already propelling billionaire growth. While debates continue over equity and fairness, the practical impact of these tax shifts was a noticeable acceleration in net worth accumulation for the ultra-rich.
Innovation in artificial intelligence and automation reshaped entire industries, from manufacturing to finance. Companies that successfully integrated AI into their core operations reported productivity gains of 2030%, translating into higher profit margins and market valuations. Founders and early investors in AI-focused firms saw their stakes multiply as demand for machine learning platforms, autonomous vehicles, and intelligent analytics exploded. The ripple effect extended to traditional sectors that adopted AI, boosting the fortunes of CEOs who championed digital transformation. This wave of intelligent technology not only created new billionaire creators but also amplified the wealth of existing ones by enhancing the efficiency of their existing assets.
Shifts in consumer behavior after the pandemic led to a powerful rebound in spending, especially online. E-commerce giants and luxury brands that captured this pent-up demand saw revenue spikes that directly inflated the net worth of their owners and major shareholders. At the same time, the rise of subscription-based services and digital marketplaces created recurring revenue streams, further solidifying financial foundations. Credit availability remained high, and confidence returned, driving purchases of high-ticket items such as real estate, yachts, and private jets, assets often owned by the ultra-wealthy. This renewed consumer vigor acted as a final push, turning the earlier structural gains into tangible, visible wealth for the world's richest individuals.
Finally, the era saw a surge in sophisticated wealth consolidation strategies as billionaires turned to family offices, trusts, and multi-generational planning to protect and grow their assets. By centralizing investment decisions and leveraging tax-efficient structures, they ensured that wealth not only persisted but also compounded across decades. This period also witnessed a rise in philanthropic ventures that doubled as strategic branding tools, enhancing public perception while opening doors to exclusive networks and opportunities. The combination of meticulous asset management and legacy-focused initiatives locked in the gains from the previous 9 factors, cementing the explosive growth of billionaire fortunes into a lasting financial dynasty.
We've journeyed through a whirlwind of forces, from pandemic market twists to AI-driven automation, each stacking onto the next to turbocharge billionaire fortunes. Understanding these dynamics not only satisfies curiosity, but equips you to spot future wealth trends. If you enjoyed this deep dive, hit like and subscribe so you don't miss the next one. New mind-blowing lists every week. Which factor did you find most unexpected? Let me know in the comments below, and thanks for watching.